today is Matt Trioni, Vice President of Professional Development and Chief Counsel at NVAR. Welcome to the show, Matt.
Thanks for having me, Charlie. I hope everybody's doing well today, staying safe.
Thanks again for joining us. So Matt has been in his position for 2.5 years at NVAR, and those of you that are not watching in an NVAR territory, NVAR is one of the largest local associations in the U.S. with 12,500 members. So Matt is an uppity up there, and he knows his stuff. So I would encourage anybody that's watching to please check out the comment box. We can see your comments and questions live. That's one of the advantages of watching live. So if you have anything to share or any questions, go ahead and put it in the box and we'll try to get to it. So Matt, I wanted to start off just by asking, how's the market? Not specifically with stats, but the feeling of the market as an executive with NVAR.
Oh, absolutely. Thank you for that. Now, it's interesting because, and this is a shameless plug, we will have an email coming out, I think, later today with our March stats. Good. So those will show at least a little bit of a trend, I think, because obviously March was a month that started off in a completely different place than it ended.
No doubt.
One of the things that we've been seeing, though, is that, and I know we talked about this a little bit before, it's really interesting to me the extent to which our industry has been able to pivot so quickly. We never, we joke a little bit about the extent to which real estate is known for not necessarily being at the forefront of technology and innovation, but I've been incredibly impressed by the way that our members, realtors, their clients, the whole industry has really rallied together in just a few weeks. From what we're hearing is that there's still activity going on. It's slowed down a little bit from what you would consider a peak spring market, and probably the one that we are expecting. But a lot of people are still doing business. There's still a lot of transactions going on. Even the listings I know we'll get to the MLS in a bit, but there are a lot of active listings out there. There were a big swell of them that went into Temp Off, but that means that people are still interested at some point in getting back, dipping their toes back in the market, and demand still seems to be consistent. Prices are continuing to increase.
Yeah, one of our viewers, who happens to be the manager of our Burke offices, just wrote to say that she's involved in a multiple offer situation right now. And I was sharing with you that another one of our agents, his name is Chris, out of the Franconia office this morning, was talking to us about on Friday a property came on the market in a pretty brisk neighborhood, and he ended up writing an offer Friday. It was accepted, and the buyer got closing costs. And this was a neighborhood that was often, going well above asking price. So, I do think that there's opportunities for buyers that are willing to risk the uncertainty, right? And for buyers that are financially stable. And you were mentioning there's certainly opportunities for investors in this market, because things are not as competitive. That's not to say that they're not competitive, but they're not as competitive, certainly, that it was 4 or 6 weeks ago.
Absolutely. And certainly, issues like, liquidity, access to capital, willingness to buy a property sight unseen, that certainly can be attractive to many, especially in the investor demographic. Awesome.
You mentioned it, so let's just go ahead and go there. So most of the people watching are members of Bright MLS. We do have some folks that are watching that are members of RAIN down in Hampton Roads, and we have a few people that join us from other parts of the country. But can you talk a little bit about what Bright MLS is doing when it comes to being flexible and how temporary off is working and all that stuff?
No, absolutely. And I think that, again, everybody is pulling together and figuring out a little bit on the fly. I joke that it's kind of like assembling an airplane while you're in mid-flight.
Right.
So we're figuring out a little bit of this step by step. But some of the things that the MLS has done is that they are opening up the Temp Off status. Now, Temp Off, since the Bright conversion about 1.5 years ago, is not limited to time frame. I think it used to be like 30 days under the old MRIS, but now it's unlimited in time frame and duration. And so what they've also done is made sure that it is flexible to go in and out of Temp Off. So say have it in Temp Off, but then somebody sees the property on in Temp Off status, says they want to do a showing, your seller's okay with that, you can flick it on to active for a day, do the showing. And if they don't end up writing an offer, you can put it back into Temp Off. Days on market does not accrue while you're in Temp Off. So if you go active for 1 day or even an hour, you're going to have 1 day of day on market that will accrue. But you know, it'll pause everything else. And what they've also done is they are working with the syndicated sites and the participating brokerage sites through the IDX, so that Temp Off is actually going to be visible beyond the MLS. So you can continue to push and promote the property, even though it's not technically active, out there to generate interest. And then if people do approach you, say, hey, I have a client who might be interested, can we do a showing? If you're okay with that, or maybe they'll rely on some kind of virtual tour set up, you can toggle it on and off, active, Temp Off.
Interesting. So that may be the tip of the day, right? The ability to toggle on and off, temporary off. And we as agents need to be paying very close attention to the properties that are temporary off.
Yes.
Very good. Cool.
And of course, you know, we haven't suspended like Century Lock rules or anything like that, and the code of ethics still applies. So if you're going in, make sure you're following the showing instructions. Now more than ever, people are understandably concerned about strangers going in and out of properties, and the potential for, you know, being exposed and things like that. So certainly, you know, communication is more important than ever.
I like it. Everybody is expecting us to talk about the CARES Act, so let's do that a little bit. Talk to me about the CARES Act. What are you seeing at the association? Maybe get into a little bit about how it works for independent contractors as well.
Absolutely. There's a lot of different things that are going on in the CARES Act. It's a bit of a smorgasbord. It's an 800-page bill. I've had the misfortune of having read the whole thing. But it's important because it does cover, tries to cover a lot of bases. I think most applicable to independent contractors. As of last Friday, the window was open in order to make an application for the payroll protection programs, the loan programs. Now, every single independent contractor is going to be having a different experience. It's going to depend on what kind of business entity you've set up and how you are configured. Do you pay yourself out of the entity, or do you have employees? Do you share commissions, things like that? So it is certainly worthwhile to talk to a lender. In order to push the money out quickly, they basically opened up the whole program. It's not just your traditional SBA lenders. It's just about any FDIC insured institution can do this. Certainly, you're probably going to get in faster if you go to someplace with whom you already have a pre-existing banking relationship, because they are going to process you faster. But if you go in there, if you are able, there's a couple of different kinds of loans that you can take a look at. There's the payroll protection program loans. That is going to be designed specifically, though, for instances where you are trying to continue to pay people, obviously. And so you're going to have to be able to, if you want to take advantage of the loan forgiveness features, be able to demonstrate that you are paying people and that you will continue to do so. That being said, even if you are not, and it's simply something that you're looking in order to try to keep yourself afloat as an independent contractor, the interest rates are very competitive. I believe they're around 1%. Right. And so even if there isn't loan forgiveness, it might be preferable if you're able to get access to the money than, say, for instance, going on unemployment or something like that. There's also the Economic Industry Injury Disaster Loan Program, which might be available. That was a previous program that was in place traditionally for communities that were impacted by like natural disasters like hurricanes, floods, tornadoes, and things like that. But they actually opened it up to all states that have declared states of emergency. As of, I think, Saturday, Wyoming became the 50th state to declare state of emergency. First time in American history, all 50 states were in a state of emergency. Yeah, a dubious distinction. But the good news is that there is money that is available. That is out there, and this is going to be a little bit more flexible. It is a loan program. I think the first 10,000 might be forgivable, but it is a loan program that has a little bit more flexibility depending on the nature of your your business, and something that you can check out.
Got it. Awesome. Talk to me about unemployment eligibility, because it's awfully unusual, if not historic, that independent contractors, have the right to unemployment, right?
First time ever, actually. And we share. I would highly encourage everybody to check out the COVID-19 resources on our website as well, and we link to resources from both our state association and the national association.
Okay.
The National Association has like 4 or 5 FAQ pages on different facets of the CARES Act. That it's just FAQs. It shows you main bullet points that you can follow. I encourage everybody to check it out. We have the same information on our page. But it's unprecedented. Independent contractors have never been eligible for unemployment benefits. Now, we are going to ask everybody to bear with us, because the way that the CARES Act structured this expansion of unemployment was to say that the federal government is going to pay 100% of the money, but it's being administered at the state level through the state unemployment groups. In Virginia, that's the Virginia Employment Commission.
Okay.
But they're still trying to figure out and determine exactly how you measure eligibility. It's fairly easy with a W-2 employee. You just provide a few pay stubs and demonstrate a history of payment. That's a little bit different with independent contractors. So they're waiting for some guidance from the Department of Labor. The Federal Department of Labor is going to send some guidance to every state to determine their eligibility for the federal benefits, and then the state employment commission is going to assist in figuring in doing that. So bear with them for a little bit. I know everybody is in a tight position, but these things do take a week or two to kind of get the guidance in place, get the forms in place and the procedures so that they can start pushing the money out. But we anticipate that that's going to be occurring soon.
Good. Awesome. Talk about forbearance, and then forbearance as a landlord.
This is one of the major features of the CARES Act, was all federally backed mortgage loans, which is 60 some odd 70% of all mortgages that are issued in the country, and now are in a mandatory forbearance period. You can continue to make payments if you are able to do so, but they've ordered that all the mortgage servicers stop charging interest and stop collecting for, I believe it was 120 days as of March 27th.
Okay.
So we'll be looking at sometime around the end of July, I believe. Yep, 3rd month through the 7th month. Yep. What that means, though, is that not everybody is going to be necessarily eligible for it. So I would certainly encourage everybody to contact their mortgage servicer to ask whether or not they're eligible. Because what this does is that it does put some people in a little bit of a tight position. Say, for instance, you are representing a landlord. They have a tenant in place, but the tenant is now furloughed or lost their job, and they can't make payment on rent. Well, the landlord still has carrying costs on the property. They may or may not have forbearance on the loan, but they probably still have insurance, property taxes, and things like that. So the landlord is going to have to be in a position to figure out whether or not they qualify for any of the loan programs in order to keep themselves going. And if they are formed as a business and observe certain formalities, and even sole proprietorships might have some eligibility. So they couldn't do the payroll protection program, but they might be able to get some other kind of SBA loan or something like that. But there's several steps they should take. Number one, determine whether or not they have forbearance eligibility. Work with the tenant. The tenant might be able to pay something. Something is better than nothing, to try to keep everybody afloat. But we do recognize that this is a pain point, and we're working on potentially having something like forms to come out to facilitate this. So stay tuned.
Okay, very good. Speaking of forms, you guys came out with a COVID addendum for our viewers that hopped on late. Matt works for the Northern Virginia Association of Realtors. We're going to talk about his form. If you're not a member of that association or in Northern Virginia and you're used to using other board forms, you shouldn't just grab the NVAR form from the internet and start using it, right? So that's a good caveat from the non-lawyer of the partnership here. Matt, why don't you talk a little bit about your form and the thinking around it?
Absolutely. Thank you. And I'll certainly second that. It's not that there's anything necessarily bad about anybody else's forms. We're just going to talk about the reasoning and logic behind ours. Ours is intended to work in conjunction with our forms library like any other form. And so we encourage, if you're going to use one group's forms, you try to stay consistent within that to avoid any ambiguity or conflict in terms. So the thinking behind our form was really to take a look at, there's already a legal principle, a legal doctrine that applies regardless of the law, or regardless of what's in the contract, excuse me. It's called force majeure. It's also more commonly called the doctrine of impossibility.
Okay.
The idea here is that there is something that occurred that the parties could not anticipate when they formed the contract that now has made performance virtually impossible to do. And in those situations, what happens if impossibility occurs? So under Virginia law, at least no way that I'm aware of, this has never been applied to pandemics, epidemics, governmental restrictions on movement and closure of businesses. So if we were going to create a form, we wanted to expand on the protections that already exist at the law. So what we tried to do was expand this doctrine of impossibility to notions of pandemic, epidemic, governmental restrictions or quarantines, the inability to deliver documents or move about, governmental closures of courthouses, for instance, or governmental or closures of businesses such as banks or settlement agencies. What we're truly talking about here is not just a get out of jail free card. We're talking about a scenario where the seller and buyer, if they are worried that at some point these things might happen. We're not there yet, like we talked about. Business is still occurring. People are still doing transactions. But if for some reason it does get to the point where it becomes literally impossible to deliver documents, to wire money, to e-record the documents, then that's beyond the fault of either party. And therefore they should not be in default. Our contract already has a hard deadline. It's the settlement date. Time is of the essence as to all provisions of our contract. So at midnight on the settlement date, if the parties have not performed, usually the question is who's in default and what are the damages? So what we're saying here is if the reason why you didn't perform was because you literally couldn't, because you couldn't wire the money, you couldn't record the documents, you couldn't deliver, then you are not going to be in default. And under our contract, what that means, then the party shall immediately sign a release and they are restored to their position before the contract. We understand it's not ideal for either party. You know, the buyers had their hearts set on it and maybe needed to move. Sellers might have needed to move and, really wanted to complete the transaction. But ultimately, the buyer gets their EMD back. The seller still has the property and can try to resell at some date. It's less than ideal, but we felt that as a matter of policy was probably the fairest thing you could do to both parties. But that being said, what we are doing is we're going to preach this over and over again. Communicate. Right. Keep the deals alive. It's, having a buyer's interested in a property and kicking the can down the road a couple of weeks for settlement is probably preferable than the seller going back on the market, particularly right now. And so what we've designed our form to do is provide, facilitate a discussion and provide an opportunity for the parties to agree to extend any of the deadlines in the contract, including the settlement date. And it's designed to be used over and over again. If you wanted to sign it at contract ratification, of course, you wouldn't put any of the deadline extensions in there. You should just put those into the contract. So you can leave those blank. But say that you ratified a week or two ago and now the parties are up against it and they're willing to agree to an extension on something. You can do a blanket extension of all deadlines on the settlement date, or you can pick and choose and you can use it over and over again as many times as you need to keep the contract alive. So that's what we set out to do.
Okay, awesome.
Looks like we got a question about the addendum. I don't.
Yeah, we have somebody that is.
I see.
Basically writing a synopsis of what we're saying in the comments. Exactly.
I think that was one of the FAQs that I wrote.
Yep. Talk to me about remote closings. I had a title executive on maybe 2 weeks ago He talked about the different jurisdictions and kind of where we were. We're in a better position in Virginia. Virginia's kind of been in the forefront of this. Why don't you talk to me a little bit more about that?
Oh, fantastic! Thank you. It's again one of those things where you can't often say that Virginia is at the forefront of legal developments. But and I say this as somebody who's done transactions all over the country, and I'm licensed in Virginia, D.C., and Maryland. Virginia has had enabling legislation in place for almost a decade now to enable remote online notarizations, and the courthouses have become familiar with it. Most notaries are familiar with it and are capable of doing it. The issue has always been, though, that not every state has this. And when lenders go and take those loans that they've now issued to help you buy a property, they turn around and they go through Fannie Mae, Freddie Mac, and Ginnie Mae, and they try to sell those to investors on a secondary market. And because they are packaged into these mortgage-backed securities, they are packaged regardless of what state they are originated from. So the lenders on the secondary market, the investors, have been very reluctant to buy remote notarized documents because they don't have the knowledge, absent an industry standard, a national standard, to determine whether or not that's a valid legal document. They up until about 2 or 3 years ago, there were only 2 states that had it. There are now 3. But now that means that there's still another 27 states that don't have remote online notarization enabled by law. So in order to try to enable parties to continue to close and notarize documents, get to settlement without having to expose anybody to risk and observe best practices and social distancing, Senator Mark Warner of Virginia is actually carrying national legislation in Congress called the Secure Notarization Act. This is being supported by the Mortgage Bankers Association, by the National Association of Realtors. And the idea is that it would remove that last obstacle to the investors by creating a national standard for remote online notarization. It's specifically in response to the current situation, but it also is it's good policy. So we're supporting it. We're hoping that it's going to be moved through, and that would remove the final hurdle that some lenders and investors have with accepting these kinds of documents, because, like we already said, they're already acceptable by the courts. They're acceptable by law firms. That's really the only choke point that we're worried about right now, and hopefully this legislation will help with that.
Good. Mortgage issues. Liquidity in the markets. Some of our viewers are probably aware of the problems that some of the servicers are having. Just because you don't make your payment doesn't mean that they don't have to make their payments. I've heard about issues with overlays, higher credit scores, and FHA, jumbo loans getting harder to get from a number of institutions. So just what are you guys hearing at the association regarding mortgages in general?
Absolutely. I would say that first and foremost, an important part of communication is to talk with all of the third parties that are a part of a transaction as well. Real estate is really interesting insofar as you have a buyer and seller that have signed a contract with one another. But think about how many other parties have some kind of contractual relationship with them. You've got the inspector, the appraiser. You've got the brokerages that are representing each side. You have the agents that work with those brokerages. You have the lenders. You have the settlement agent. You have all of these parties that are necessary in order to shepherd the transaction through. So you need to be communicating with all of them now more than ever. But it is really important to be talking to your lender right now. If you have clients who have loans in the pipeline right now, they need to be talking to the lender about realistic time frame for settlement. The lenders are very busy. They were anticipating a busy spring market. Plus, refinances were very big because of the low interest rates that were there for a while. So they're a little bit under the gun. And like everybody else, they have people who have gotten sick or people who are not able to work. So talk to your lender about to what extent anything that's going on is going to impact your loan closing schedule and the ability to get the loan. The lenders are increasing the credit scores, not necessarily because of anything that the federal government is mandating, but because it's a response to the market situation. If they are going to have any hope of selling these loans in a market where there just is not a lot of investor interest in buying mortgage-backed securities, They need to have people who are higher levels of credit worthiness. They're going to be looking for easier government guaranteed loans, your traditional 80/20, the kind of loans that are easier for them to sell. So you are going to be seeing, perhaps just as a reflection of the market, tightening of credit scores and eligibility. You're going to be seeing less access to the money that they need in order to issue more and more loans. So talk to every individual lender is going to be different. They have different resources for where they get their money from, but until such time as there's a more comprehensive federal solution, everybody's going to be figuring it out one case at a time.
So I think that, the overall advice today is probably just over communicate, right? Everybody should just over communicate and keep the deals together. And if you're a buyer's agent, call your buyer's lender. And if you're a listing agent, be in touch with the lender more than you normally would. A lot of us, we may call the lender when we first get the offer, have a little chat, and then we think things are good. I think, being in touch every week to 10 days is not a bad idea.
Absolutely. And if you're doing anything out of the ordinary of what you've historically done, if right now we're hearing feedback from inspectors, for instance, that if they are going to do an on-site inspection, then in observance of social distancing guidelines, they're going to ask the buyer's agent and the buyer to wait outside.
Right.
Not necessarily anything wrong with that, but make sure that you're communicating with the seller via the listing agent to get permission, because that's a little bit of a departure from the norm. And it's just important to be having these levels of conversation. If you are working with a lender and the seller is particularly concerned with providing access to the property, talk to the lender about whether or not the appraiser can do a desk appraisal or an exterior only appraisal. Those conditions have lightened up as well. And again, it's going to be on a case-by-case basis, but talk to the parties that are involved, find out what they need to do in order to do their portion of the transaction, and make sure you're communicating that to the other side.
So over-communicate, set the expectation. I always tell agents, if we do not set the expectation, there's already one set, right? Your buyer or seller has one, right? You may not even know it. So if we don't help them reset it, there's going to be one anyway. What else?
It's incredibly important now more than ever, because your clients are understandably afraid, and if they want to be marketing the property, that's fine, but you need to set a reasonable level of expectation about the other party's ability to access property and what that means and how you're going to do best practices as a part of that.
Good. Excellent. What else are you guys seeing? Anything else that you want to add to the discussion today, Matt?
I would just say that more than anything, it's important to stay informed. This is a rapidly evolving situation. A month ago, we were in a very different place, and the information keeps happening. But my biggest takeaway from all of this is we're doing business in a different way than maybe we have historically, but we're still doing business. Our members are busy. They are, and all associations, are safe, and you're able to continue to do business in a smart way. Sometimes people are asking me, oh, are we essential or are we not essential? At least for the purposes of all the jurisdictions that we have members in, it doesn't matter. As long as you can observe social distancing and CDC guidelines, you can continue to do your business. But we're also going to rely on our members to do those best practices themselves, because that's our best defense from government coming in and telling us exactly what we can or cannot do. Please communicate with us. Make sure we know what's going on. Please stay tuned. Read those emails. I know we're cranking out a lot. Visit the websites. We have a lot of information out there, but there are resources that are available to help you all through this time. But as long as our members are doing business, we're going to be online for business as well.
Awesome. Easy website for NVAR, NVAR.com. And we have more specific links over in the comment section. Matt Trioni, always a pleasure. I appreciate you joining us today, and we'll talk to you soon.
Thank you so much for having me, Charlie. Everybody stay safe out there and take care.
Take care.